Hi, and welcome to the Stockscores Market Minutes for November 7th, 2014. Reminder of my presentations upcoming on Monday. I will be in Toronto, Tuesday, Ottawa, Wednesday, Montreal, then Saturday in Edmonton, Monday and Tuesday in Calgary, and Thursday and Friday in Vancouver and Surrey. For more information, go to stockscores.com/upcoming-events.asp or just go to the Stockscores homepage and click on the events link. It's the blue link in the upper right-hand corner of the homepage. All right, the trend is your friend. This is something that we've all heard many times, and yet so many times investors seem to forget this simplest of rules. We should be buying stocks that are going up and not trying to doubt their strength. At the same time, when stocks are going down, we need to get out of those stocks and not try to think that we can pick the bottom. Now, there are times when you can pick the bottom, and that's when they turn from going down to starting to go up. And likewise, we want to get out of strong stocks when they start to roll over. But we need to keep it simple when we are investing and not fight the trend. Don't try to be this contrarian that doubts what you are seeing in the market. Ultimately, what you see in the market is what is important, and you will be far more successful keeping it simple, simply buying stocks that are going up and selling stocks that are going down. Sounds like simple advice, and yet so many times people overlook it. All right, let's take a look at the market. The S&P 500 had some weakness through September and the first half of October. It has now recovered and is back to all highs. So the potential for a falling top is gone. We're back into the upward sloping channel, and we're really at the lower area of that channel, and so I see pretty good upside potential from here. Now remember, November until May tends to be the strongest time of the year for stocks, and so we should be at the edge, the leading edge, of a pretty good continuation of the long-term upward trend. The Toronto Stock Exchange, we'll get to in a second. IWM, which is the Russell 2000, is lagging the S&P 500, so the small caps are lagging the large caps. It too has come back nicely, but it is not yet back to the highs, and it's still showing this broadening of volatility, which means there is increasing uncertainty about the small caps. Now, what I'd like to see is a breakout through that green level of resistance, which would indicate to me that the small caps are going to finally catch up to the large caps. But right now, they still are an underperforming sector. And therefore, I don't expect to see a lot of picks from that area just yet. I think that will change. If the market continues higher, we could see some of that money trickle down into the small caps. But for now, I think you still have to be pretty cautious with buying the lower price stocks. All right, the TSX has made a little bit of a comeback over the last 4 weeks, but it is far off of its highs, and that's mostly because of weakness in the materials and energy sector. Now, the TSX 60 is made up 35% by those two sectors, and so there is some strength in Canada. The banks have been doing well, some of the consumer staple products, even technology not doing too bad. It's really the commodity sectors that are dragging the TSX down. So I think when you're trading the TSX, you have to be sort of selective in the areas of that market that you are trading. It's not like the S&P 500 where most of the market is going up. In fact, in Canada, you've got a real tale of two markets. It's commodities versus everything else. Now, the commodities may stabilize soon, but for now, I think it's an area to be pretty cautious with. And that's why the TSX Venture really looks so ugly, heavily weighted in commodities on the TSX Venture. And so generally, in those commodity names, those micro cap and small cap commodity names, you got to be pretty cautious. The U.S. Treasuries, which is really a reflection of interest rates, continue to be in a long-term upward trend. That means interest rates are in a long-term downward trend. Until we break that green upward trend line, I don't see any reason to think that interest rates are going to start to move against us. Now, that could start happening anytime, but for now, I remain optimistic that treasuries in the U.S. bond market is going to continue higher, and that means interest rates continuing lower. U.S. dollar broke to new highs this week and kind of had a bad or a weak close, so that may indicate we're going to try to pull back again in the short term, but big picture here is a bullish outlook for the U.S. dollar, which is bearish for commodities. Speaking of commodities, there's the big one, gold, broken down through support last week. It recovered from some weakness early this week, and I do think it may make a little bit of a bounce back in the short term. But big picture, there's really no sign of optimism here in gold, and so I want you to remain cautious on gold. Oil has fallen into long-term support and made a little bit of a comeback from weakness that occurred earlier in the week. So we could see oil try to hold that long-term support, that horizontal line of support that I've drawn. It's heavily oversold. We can say that because price is currently far below the downward trend line. You can approximate the downward trend line by that moving average, the blue line that I have on screen. So we're far below that, which means price is due for a bounce back. It's at long-term support, so it should bounce back. And so I think there is the potential for a little bit of a trade on the long side in some of the oil names, but don't get too long-term in that expectation. The big picture here is that oil is still struggling and the oil stocks will struggle until we can start to see some rising bottoms build in the oil market. The VIX, the VXX, is getting back into its range from pre-correction. So a lot of the fear is coming out of the market. It looks like we're back into a bull trend in stocks, and fear is not something easily traded as it once was. Certainly through September and October, it was lots of fun to trade the VIX and the XIV, but that's kind of been flipped around now. And I think we're going to see the emphasis return to stocks. So that's really my comment this week, is that the U.S. markets are back to their old highs. We've taken away the falling top concern. Canadian market is lagging. It is recovering, but it is still lagging in those commodity areas. Gold has broken that long-term support. We talked about that last week. Oil is at long-term support, so it's trying to hold there, very oversold and due for a bounce back. I think we can move away from trading the market, which we did through much of October, and now focus again on trading stocks. The market's going to matter less in terms of how it pushes the individual stocks around. So start to focus in on individual stocks. I know in my daily newsletter I'm going to get back to picking stocks again, because we are going into that strong time of the year for the stock market. All right, well, that has been the Stockscores Market Minutes for November 7th, 2014. Have a great week in the market and trade well.